Asian emerging markets steadied on Friday as investors navigated volatile global sentiment driven by Middle East tensions, rising oil prices, and shifting monetary policy expectations, while several regional markets remained closed for the holidays. South Korean shares rose on Friday after sharp losses in the previous session, although thin holiday trading kept gains modest as investors tracked the latest developments in the Middle East. South Korea's KOSPI index jumped 2.7%, trimming earlier gains after sliding 4.5% in the previous session. The Bank of Japan will keep on raising interest if its economic forecasts hold, a senior central bank official said, reinforcing a tightening basis even as fresh surveys show firms feeling the pinch of rising fuel costs linked to the Iran war. While higher oil prices pose risk to economic growth, they could also push up underlying inflation by raising long-term inflation expectations, said Koji Nakamura, the BOJ's executive director overseeing monetary policy in Parliament on Friday. Markets had a nervous week, rattled further on Wednesday when US President Donald Trump threatened more attacks on Iran and offered no hint of when the conflict might end. Investors did, however, get some relief overnight on the news Iran was drafting a protocol with Oman to allow ships through the Strait of Hormuz. About a fifth of the world's oil trade normally passes through the narrow channel. I think that provides some sparky sentiment to the market, especially for the market still open today, said Poon Panchul Bull, a market strategist at Krung Thai Bank. In a further lift for sentiment, Britain held talks with dozens of countries to explore ways to open the strait, though the meeting ended without any firm agreement, according to one official. Thailand's SET index reversed early gains to dip 0.4%, and the baht appreciated 0.5% to 32.59 against the US dollar. Late on Thursday, the country's central bank chief said no major policy shakeup was needed for now, even as rising oil prices stoke inflation fears. The Bank of Thailand unexpectedly cut interest to 1%, the lowest in more than 3 years, to support Southeast Asia's second largest economy. Against a steady US dollar index, the ringgit firmed to 4.027, while the South Korean won kept its 4-day rally alive, poised for a 0.3% weekly rise, its first since late February. Under their base case oil price assumption for crude oil to rise further this month before easing in May and June, the won, baht, and Filipino peso and ringgit are likely to depreciate further and see higher volatility in April, MUFG analysts said in a note. The currency could partially recover in the remainder of Q2 as oil prices decline, the note said. The analyst added that the ringgit was likely to be an outperformer in Asia in the medium term, benefiting from strong investment momentum, resilient domestic demand, and an AI-driven tech upcycle once global markets ease. The Malaysian ringgit has also been a standout in Southeast Asia, building a 0.7% gain this year against the dollar, while regional peers have struggled. Financial markets in Indonesia, Singapore, and the Philippines and India were closed for the Good Friday holiday, while Taiwan markets were closed for Children's Day. China stocks slipped on Friday, declining for a third straight week as uncertainty in the Middle East reinforced a risk-averse mood ahead of a local holiday. Hong Kong markets were closed for Easter holiday. China's blue-chip CSI 300 index closed 0.9% lower, while the Shanghai Composite Index SSEC eased 1%. The CSI 300 index ended the week 1.4% lower, extending declines for a third straight week. China's onshore market will be closed on Monday for the Qingming holiday. Analysts at BOC International said markets have yet to see clear details on control of the Strait of Hormuz or efforts to resolve the oil supply chain crisis, keeping concerns over crude supplies elevated. Iron ore prices extended losses to a second straight session on Friday and were set for a second weekly decline, dragged by elevated portside stocks in top consumer China. Although signs of improving demand helped limit the drop. The most traded iron ore contract on China's Dalian Commodity Exchange, DCE, closed daytime trade on 0.5% at 799.5 won, $116.26 US dollars a metric ton, posting a weekly fall of 1.5%. Markets are expected to remain sensitive to geopolitical developments and energy price movements, with investors closely monitoring risks to trade routes, inflation pressures, and regional growth prospects in the weeks ahead.